Alrighty, welcome in everyone. Happy Sunday. Get an audio check here on my end. All right, should be good. Audio's clear on my end. You guys should be able to see the dollar weekly chart. Because of what I mentioned in the Discord and the announcements, I do have family over, and we are going to be hitting a lovely waterfall. Weather sunny, hot, beautiful. So looking to enjoy the rest of my Sunday. So with that in mind, guys, this one's going to be direct to the point, what I'm looking for, what opportunities we have this week. And the first order of business is I'm answering one of the most common, frequent questions I get as a coach and mentor, which is how do I backtest? So many different ways of backtesting, FX replay, so many different ways that I've seen in my time of speaking with other traders as to how they backtest. I found something that's extremely effective. It's very concise because usually you fall into one or two camps. Either you backtest once in a while, and when you do, it's a 3-hour session and it's nothing you do consistently, or you just don't even do it at all. And that's why you have hesitation, fear, uncertainty, and there's not a lot of confidence behind what you're doing because you just haven't naturally seen it a lot. Backtesting is the answer to that, but doing it the right way. I will have a YouTube video on that out tomorrow so that you guys can see the exact backtesting protocol that I used to get to consistently losing money, to consistently profitable, to eventually full-time day trader. So let's go ahead and get into it. We're going to start with the US dollar, bonds, indices, and then from there I think we'll take a look at Bitcoin, crude oil, and we'll go ahead and close up. And silver popping like crazy. So let's go ahead and get into it, guys. Amy, happy Sunday to you. William, afternoon to you, sir. Silver bullet trader, hello, hello. Cleo, looking forward to the video. Absolutely, it's a good one. Worth the wait. Much more coming on YouTube. We will be active going forward on YouTube much more consistently. A lot more content coming out to help traders that need guidance on YouTube. And we're going to be delivering the goods just like I would as if you guys were members working with me directly. So you can trust I'm going to deliver on that and definitely be on the lookout. It's worth the wait. Appreciate your guys' patience. As you guys know, I have been busy working with the actual members. So that's occupied a lot of my time. But now going forward, I will be making more time to help out the free community. So looking forward to that. All right, guys, let's go and break it down to a weekly chart for dollar. We've been bearish. We were looking for the consequent encroachment here, or midpoint of this wick. So wick 50%, split that in half, extend that through. That delivered nicely last week. Weekly inversion for value gap, still holding price to the downside. So we're bearish, looking for lower prices. There's nothing bullish as of right now. Through the consequent encroachment, I'm looking for sell side here. And that's what I'm looking at going forward. Dropping down into the daily chart, now this is where things get a little more interesting, really sloppy in here. It's a lot of banging around. We're starting to see a lot of overlapping candlesticks. Not something I like to see for clean price action, right? Clean price action is going to look a lot more like this. And when you see just a lot of this overlapping, unstructured, more sloppy price action, it is much more difficult to trade, to navigate. So if you guys have been having a little more difficulty in the Forex side of things, it's probably largely in part because of the difficulty we're seeing with the US dollar to want to make any ground, either bullish or bearish. As of right now, though, market's bearish. It's heavy. I'm not looking to call a bottom in this market. Again, that weekly wick midpoint delivered nicely. And then we're seeing a little bit of a rejection there. What I'm watching is, again, what we covered last week, which is this bearish breaker here, extending that through. As long as we remain below that, I'm focused on lower prices. If we trade to it and through it, that will change things for me going forward, and then I will likely become neutral to potentially bullish. Hourly chart, complete mess, right? We can see just a lot of consolidation profile. Intermediate term lows broken, intermediate term highs broken. So there's not real clear market structure or direction, and that's coming again from the higher time frame down. The daily chart's in a consolidation, so it's reasonable that we're going to see the same business on the hourly and the 4-hour chart. Moving right along here, looking at the bond market. So we've been calling this thing lower. Key level we were focused on last week was this bearish breaker block here, extending that through. You'll see we did trade to the high of it, but we did not violate it, signaling it's bearish. I gave you guys the draw on liquidity, Z's equal lows here. And again, that's largely in part because if we go up to the weekly chart and we look at the market structure, we'll just focus on one of these here. Clear bearish market structure, right? We have an intermediate term high here, intermediate term high here. This is a long-term high. So when you have market structure like that, it's easy to predict price swings. We were watching that weekly fair value gap here. We traded up into that. The bodies respected it nicely. And what I'm looking at, if we go up to the monthly chart, is for a heavy monthly expansion. So if we look at this monthly candle here, I'm seeing the open, the high, traded into this opening price as a bearish order block. And now we're looking for expansion to the downside on bonds. So now when we take that down to the daily chart, you can see why I was looking for this to perform as a bearish breaker block. So equal lows here, if we accelerate through that, which I want to see, my attention then goes to these equal lows down here. And I think a lot more downside to come in the bond market. And then when we zoom in, the markets are fractal. And then you look at the market structure on the daily chart as well. Same thing, intermediate term high, long-term high. And that's how you go about doing top-down analysis and market structure. Much more on that for those of you guys that are working with me. That will be the month 4 content, institutional market structure. And we'll cover that in much greater detail. But just introducing you guys to the concepts that we're using to call the markets very precisely. Dropping down into the 4-hour chart. I see this as a run on stops here. So now this becomes a key high on the 4-hour chart. So I want to see this fair value gap here perform like inversion function. So meaning we're now below it, hit it, sell off, and that would allow me to continue trusting sell models for lower prices on bonds, which would be good because if we look at the monthly chart, again, we've been in this range for a while. So it's nice to see that we're likely going to leave that range, and that'll also give cleaner price delivery in other assets as well. Because if you understand that the bond market is really the main linchpin of the financial system, bonds and interest rates dictate currencies, equities, and all that business there. So just understand bonds are very important in how they nest inside the whole financial system. All right, going right over to NASDAQ here, we will start, not that layout, let's go here. All right, so weekly chart, we've been bullish looking for higher prices. We covered last week, we want to see this down close candle act as a bullish order block. It did, we're looking for higher prices. Next weekly candle, want to see it open, rip higher, and clear out these buy stops. Again, I'm not saying we have to do it in the next weekly candle. Just understand that that's what I'm looking for, and that's going to continue giving me the bullish bias. One thing I also want to touch on as well, I was looking at my trade logs. Usually Saturdays is the day I review the previous week, but I use more specifically non-farm payroll week to actually review the previous month's data. So I have a very consistent routine week to week, month to month as to when I'm reviewing, when I'm doing certain things. Because my trade frequency is dialed down on non-farm payroll weeks, I use that time for productive things such as going over my data, looking at trends, patterns, things that I want to identify in my trading. And one of the things I've noticed, which I was really pleased, I want to share with you guys, is a testament to higher time frame bias. If I look at all my trades from the past month to 6 weeks, most of them have been bullish, going long, right? I would say 80 to 90% of them have been going long. And when you look at the daily chart, clear bullishness. So you can see how important it is to have a higher time frame bias, know what you're looking for. So you're not in there chasing patterns on your lower time frame, going short in a market that's clearly ripping higher. So bias is extremely important, simply because if you go into your lower time frames, of course there's going to be drops, right? So I'm not saying no one can short and make money, but I'm saying the most explosive, the easiest, the best trade setups are going to be in line with what? The higher time frame order flow. So by understanding where that higher time frame is going, it makes your trading so much easier because you're just swimming with the tide, you're swimming with the river, and that's much easier to do than trying to fight it and swim upstream. So I just wanted to point some things out with my data and kind of how that blends into what we've been talking about here, calling index futures higher, and how I'm actually using that in my intraday trading, to trading 1 minute and sometimes even sub 1 minute charts. But bias and higher time frame is extremely important because it's what's anchoring what I'm looking for in the lower time frames. And you guys will learn a little bit more about that in the backtesting video I got for you guys as well. So weekly fair value gap here, watching this level here, really like to see how we had a strong close above that. You'll see constant encroachment, nice strong close above that. I want to see this perform as an inversion gap. So I want to see us get above it, potentially use it as support and rocket higher into these fund level buy stops here. This gap here left open, signaling the market is extremely bullish. All right, daily chart here, we covered this was an intermediate term low last week simply because this low took out sell stops. Now that's confirmed with the market structure with this creating a short-term low. So we have a short-term low, short-term low. This makes this an intermediate term low. Kind of looked like a smiley face. That was pretty good. Didn't even try to do that. Intermediate term low, drop down, bullish order block that made the low of the week last week on Monday. We were calling that, for those of you guys when we were live trading on Monday, you guys recall Monday low of the week inside the bullish order block, and the market traded higher into the fair value gap and then the previous week's high buy side liquidity that we were looking for. I'm going to take off this weekly level here just to clean it up. And now we're looking at these two inefficiencies on the daily chart. Now that we closed above midpoint, I'd like to see if we can get above it. Whoops. We'll use it as support, expand, and then reach into this gap here. So next row on the daily chart is this inefficiency. Through that, we have the equal highs here, all-time highs, and then we'll call that the 22,672. Through that, in case we really pick up on the upside here, which is very possible. I'll look for the 815 level. So through this all-time high here, 815 is the next roll. All right, hourly chart. We're already inside that daily gap. We already had a nice drop lower on Thursday, clearing out these equal lows. So I personally would want to see the market stay above this daily fair value gap. I don't think there's any need for the market to come down. So what I would prefer to see this week is the market stay inside this daily fair value gap, get above it, support, and then rally higher into this fair value gap here. And then again, eventually expand into the all-time highs to clear out the buy stops from the beginning of the year. S&P, let's see. I'll go over Bitcoin in a minute. Let me go over S&P. S&P, it's going to be the same thing. You guys recall in the Discord, I think about 3 or 4 weeks ago, and this is free, by the way. You guys can all join now. We're looking at this weekly inversion fair value gap for S&P. You can see how we've been using it as support with the bodies. Once more last week, expanding higher. So the draw for me is to fill the buy stops. These relative equal highs here for E-mini S&P. Nice strong close above that gap, exactly what we want to see. Next draw would be this one here. And this order blocks, these last two up close candles. I would use that over the fair value gap just because the order blocks first. So extend this opening price through. And that's what I would use as the first draw. And then through that, we'd want to see the buy stops taken care of. All right, so last order of business here, Bitcoin and crude oil. All right, so looking at Bitcoin here, going up to the higher time frame. Monthly chart, we're still bullish, right? Nothing's changed higher time frame. So what we're looking at is open, potentially the low of the month, and then expansion higher for Bitcoin. Looking at the weekly chart here, we called the drop last week, but if you recall, I only called it down into this inefficiency here. So these sell stops and this fair value gap. Simply because higher time frame, the market's still bullish. And you guys know I don't like to call tops and bottoms. Of course, in bull markets, there are retracements, right? So it's not to say markets just go straight up. But when I say I'm not trying to call a top, I'm not saying, all right, we're going lower and Bitcoin's going to crash down to zero. It's simply we're looking for the market to trade down into this weekly gap here. We hit that gap, stayed in the upper half. That's extremely bullish. So now dropping down into the daily chart here. We drop down equal lows here. So anyone that's been fortunate enough to be long, they have their stops trailed here. So now they've been knocked out. So what I'm looking at is for this to actually price in an intermediate term low. And then I want to see if this up close candle here can act as a bullish breaker block. So we want to see a support price as a breaker and then expand to new all-time highs. Why is Bitcoin and why are rather indices rallying? Because we're in a risk off scenario, or sorry, risk on scenario. So I thought off because dollar was selling off, but that's not right. Risk on scenario. Dollar selling off. Money's going to go into risk assets, such as cryptocurrency, NASDAQ, and foreign currency as well, right? So in a risk on scenario, foreign currency is going higher, stock equities are going higher, and Bitcoin is going higher as well. Last order of business is the crude oil. All right, so going up to the weekly chart here. So you've seen a nice drop on crude oil into the sell stops. So now that we've been consolidating, potential manipulation, huge distribution. So let's take a look at that. So we had these lows here. All the way from 2021 cleared out. So all this sell stops here and here have now been wiped out of the market. So what I'm interested to see is, do we see a longer term turning point in crude oil? I think with a lot of the escalations that are going on around the world right now, especially with the tension in the Middle East, with what's going on with Russia, all those things, there's a lot of things that are escalating in that regard, and that will absolutely impact the crude oil markets. So now we understand that the markets are moving based off what these candlesticks are showing, the open, high, low, and close. So we've seen the markets have done what? Drop, taken out sell stops. So now if things were to kick off, we could really see crude oil expand like crazy. So from the 64s, looking for higher prices. And if this does become a long-term turning point, and what would confirm that is we'd have to get above this little gap here, and then we start really trading higher, then I'm calling crude oil all the way into the 95s, all the way into triple digits. And that's what I'd be looking for if we see a longer-term turning point here going forward. Kevin, happy Sunday to you. Amy, if you haven't already, can you provide insights for gold, silver, oil? Yes, we touched on gold, touched on oil. Well, I did not touch on gold. Let's touch on gold. Yeah, Absolutely. Usually got to cover the usual suspects. Absolutely. So daily chart for gold, watching this down close candle here. If we lose that, then that could be bearish for gold in the short term. Longer term, I do believe everything is still bullish, but we can see, obviously, retracements and fluctuations against the higher time frame direction. So long term, I'm still bullish. However, we do have to watch how we trade inside this down close here. So down close on the weekly chart, and then the down close on the daily chart. I want to remain bullish again, because again, we're at all-time highs. So I'm not trying to call a top in this market, but just watch this down close candle. If we lose that, then sell stops here, this inefficiency, and then I'd watch this order block here for gold. Silver, absolutely ripping, man. Silver investments doing good. I don't trade the metals market, but they are definitely a good investment. Not financial advice. Let's go to the weekly chart here. So what we've been watching on silver here was this up close candle here. For a long time, we were spent inside this range and time distortion here, which is just sideways price action. But we finally ripped through this up close candle here. So I believe we have a lot more upside to go on silver, especially if we can see some acceleration above this high. Much higher to go on silver. So silver is essentially all-time high protocols. If you're new here, you haven't been working with me for a long time, during all-time high protocols, it's very simple. You keep trusting your buy models, looking for higher prices when markets are at all-time highs. So this fair value gap here, I would study that lending support and sending the market higher. Consolidation, expansion. After consolidations, that first gap, we generally want to see that be a breakaway gap. So it'd be nice if we can leave this one open, trade into this one, accumulate, send the market higher, and that would be extremely bullish long-term for silver. Excellent question, Amy. Lotus, hello, Dylan. Bitcoin, all-time high? Yes, more all-time highs likely coming. Happy Sunday to all you guys. Alrighty, guys, I'm going to go and get going. Appreciate your guys' time here today. Again, be on the lookout for that video tomorrow. It will be an insightful one and definitely worth your time. See you guys on the next one. Stay safe this week. Take care, everyone.